XRP entered a completely different league today. Did you know that? The spot ETF from 21 shares has started trading, and now even a retired school teacher receiving a pension through Goldman Sachs can invest in XRP directly from a regular brokerage account. No wallet, no private key, no complex process. You buy XRP just like you buy a stock. But the real question is this: why did such major institutions all move at the same time? Franklin Templeton, Grayscale, Bitwise, they all filed ETF applications in the same week. Is this a coincidence, or is there a much bigger plan behind the scenes? In this video, I'll show you the real impact of these ETFs, the on-chain data nobody is noticing, and the silent moves institutions are making. If you subscribe to my channel and turn on notifications, you won't miss analyses like this. A like also helps the algorithm push the video to a broader audience. The ETF trading under the ticker TOXR mirrors XRP's price action directly. You're not buying the physical token, but you profit when XRP goes up and lose when it goes down. So why now? Because regulatory uncertainties have dramatically decreased over the last 6 months. The SEC's case against Ripple concluded, and the court confirmed that XRP is not a security. This ruling was a green light for institutions. More importantly, big funds were struggling with the crypto problem, managing digital wallets, cybersecurity protocols, cold storage systems. These things don't fit into the structure of an institution managing billions of dollars. The ETF eliminated that chaos. Now institutions can take XRP positions using the systems they already know. And this is where things get interesting, because this isn't just one ETF, multiple players entered the market at the same time. Canary Capital's ETF hit $58 million in volume on its first trading day. For a crypto product, that number is impressive. But what's even more notable is this: that volume isn't just retail investors. Most institutional buys aren't even reported yet, because SEC filings are published 3 months later. So what we're seeing now is only the visible tip of the iceberg. And the behind-the-scenes chatter is even more striking. Several major pension funds are rumored to be waiting for these ETFs to allocate capital to XRP. Heavyweights like Franklin Templeton have already begun taking positions quietly. Grayscale's XRP trust has existed for years, but now it has converted into a spot ETF, which multiplied liquidity. Bitwise has started offering special XRP strategies for institutional clients. While all of this is happening simultaneously, something else is unfolding. XRP balances on exchanges are falling sharply. There's a pattern here, and nobody is talking about it. When you look at on-chain data, you see this. Over the past 3 weeks, more than 400 million XRP has been withdrawn from major exchanges. These tokens have been moved to custodial services or locked into cold wallets. ETF providers must hold physical XRP, meaning that for every share sold, real tokens are bought from the market and placed into their vaults. These tokens are no longer part of active circulation. At the same time, large whales are also withdrawing from exchanges, which is typically a signal of accumulation before a rally. Now think. Demand is rising because ETFs are buying tokens daily. Supply is shrinking because both ETFs and whales are pulling from the market. This is a classic supply-demand imbalance. When Bitcoin ETFs launched in January 2024, BTC rose 80% in 3 months. Could the same mechanism be unfolding with XRP right now? On-chain data suggests it could, but the market hasn't fully priced it in yet. This is where institutional silent strategy kicks in. Let me give you a detail most analysts overlook. Big institutions don't see ETFs only as investment vehicles. They also use them as price control tools. How? Through the ETF structure, major funds can hold millions of dollars worth of XRP and control supply. At the same time, they can open futures positions and hedge. This gives them power in both spot and derivatives markets. According to leaked reports, some hedge funds have developed arbitrage strategies using XRP ETFs, profiting from the price gaps between spot and futures. These games happen in layers retail investors never see. There's also the regulatory layer. After the SEC gave XRP the green light, ETF filings for other digital assets accelerated. Solana, Cardano, even Polkadot have applications pending. But XRP is different because of Ripple's banking integrations. Hundreds of banks use Ripple's technology, and XRP is the fuel of that system. Institutions know this, and they are positioning for the long-term play. What began today is not just an ETF listing. It's the beginning of XRP being placed at the core of traditional finance. Institutions are coming quietly. On-chain data shows supply contraction, and the market hasn't noticed yet. What do you think? Can XRP capitalize on this opportunity? Or are institutions simply setting a trap for short-term speculators? Share your thoughts in the comments. Let's discuss. Don't forget to like the video and subscribe to the channel. See you in the next one. Stay tuned. I'll keep enlightening you.